I'm joined today by John Payne, author of The Swine Times. John, as we look at what's been going on in this lean hog market, are there any indicators of where we're headed? It sounds like, maybe the whole situation with China is starting to resolve itself.
Well, COVID is the issue when it comes to hogs, in my opinion. Not just, obviously, the U.S. is kind of moving past its problems, at least we hope we are. But in the case of China, obviously going through major spikes here across most of the country. We haven't seen Beijing locked down yet, but I would imagine that's coming. And how does that work with the processing margins there? We've heard that they're going to be buying for reserves, state reserves here as far as frozen pork supplies go from the U.S. So I think prices are somewhat steady. The problem for us is really on the buy side would be how do you justify paying, call it $15 premium on June. We're at 116. Last year's high was 130. And you're kind of starting to see the product market slip a little bit here as high prices are weighing. I think high gasoline prices especially are weighing on food, especially protein demand as well. So, packer margins are there. I think you'll see these guys continue to participate, but the long run here, I do wonder if we got a wreck coming, especially in that October. Look at the October as a way to hedge it. I think the value really there, if we get above three figures, into the three figures rather for October contract, that's where I would probably look at some LRP or some sort of government protection, just in case you get a big run on COVID, maybe something comes back this way. But you got to manage that risk somehow, especially at prices where they are.
How much pressure are grain prices putting on livestock producers?
Well, I mean, quite a bit. But when you have higher prices at the back end of it, it helps. I think from the hedge perspective, if you sell hogs, you're buying corn. So, when you look at the corn markets rallying really strongly, you're probably going to see hogs limit down, but that's what we saw this week when we were really strong on corn. It's a difficult thing for me to try to tell folks to go out and buy physical right now. I think you have to use the curve in a way that the producers would have used the curve 2 or 3 years ago, where prices, you got to price it ahead to get the best price. Same on the buy side. You look at like September corn for this year, it's in the mid 6s. Maybe we don't get a crop. Maybe things are problematic and we're up in the 8s, but the value is in the back of the curve right now for those guys to trade, not the front.
All right, John, appreciate it. Thank you so much for being here as always. Really appreciate the insights. We'll be back with more Ag Day coming up in just a minute.
To find John's newsletter, This Week in Grain and Oilseeds, head over to www.thisweekingrain.com.